Welcome back. Well, recovered a little bit for the Bank Nifty. So there is some buying on dips which is taking place for the Bank Nifty. But in the broader markets, one stock that stands out is Page Industries. That stock should come up for you. It's down close to around 9%. Not that much in terms of liquidity for that one. But Mangalam has thrown up some interesting information on that, on Page Industries, where the promoters have in fact sold 2.81% stake in the company between the 24th of December up till the 18th of March. So the promoters themselves have reduced the stake all the way to 49% versus 51.81%.
Yeah, let's put this in perspective actually. The stock fell so much from that period and everything fell. So I think this 9% fall that you're seeing today is unwarranted because it's a mandatory disclosure which has been made that in the 3 months there was some promoter selling. The stock fell from some 13 or 14,000 to 10,000 in line with the market. And today is again a bit of a weak day, so the market has latched onto that. You've got to put things in perspective. It's not that it happened last week. It happened when the market was weak. Over a period of 3 months, it has happened. So let's put that in perspective. So that's Page Industries. But let's move on.
In fact, there's a positive news on IDBI Bank as well, where there are government officials telling wires that there could be other investors that could be interested in IDBI Bank, where it's, I think, GIC and Temasek, which could be interested in buying stake in IDBI Bank. That stock currently up around 3% odd. But let's get talking on the commodities then. We have Hitesh Jain of IIFL joining in. For that, Hitesh, hi, thanks very much for taking the time out. First, what would your strategy be on gold, considering the geopolitical issues that we've seen yesterday?
As far as geopolitical shocks are concerned, generally the gains arising from such situation are on the short play. But we prefer to stick with our broader view, where we think that gold is going to persist with the overall bullish momentum, and we see gold $1,400 per ounce before the end of June. But before that happening, any substantial gains happening, we are expecting some kind of a consolidation in the short run. And in the process, I think gold price can correct towards $1,200 or $1,210 per ounce. So as far as short-term perspective concerned, we prefer to sell both gold and sell at the current levels. So for today on the MCX, we prefer to sell gold at 28,900, target should be 28,600, and stop loss should be 29,100.
Okay, Hitesh, hi, good morning. What about copper? How are you trading that?
The recent gains which we have seen, I think copper is particularly finding it difficult to sustain. On the MCX as well, 340 seems to be a strong resistance. The vibes from China clearly state that although there has been some moderation or the curtailment in the supply side scenario, but the softness or the curtailment in the supply side is lagging behind the softness or the subdued tone in the demand side. So I think it's time for the selling pressure to resurface, and we may see some correction happening in the entire non-ferrous spec. As far as copper on the MCX is concerned, we prefer to sell around 339, 340, and we're looking at a target of 330, 334.
Okay. What about crude prices then, Hitesh?
I think I reiterate in the same view that markets sometimes generally are influenced by the perception than the reality. The reality remains that there's nothing happening on the ground as far as supply side curtailment is concerned, because the overall global markets still remain oversupplied. But the perception that OPEC is going to do something at the April meet is actually providing some support to the prices. And there has been change of heart as OPEC is concerned. Now markets perceive that OPEC will no more a passive onlooker as they had their laissez-faire policy, and whenever selling pressure resurfaces, they'll definitely come out with some kind of price stabilization measure, including the freeze. So that is providing some support, and I think that the current rally would be extended towards at least $43, $44 per barrel as far as WTI is concerned. For today, I think we prefer to buy a bit on the dips on the MCX at around 27.30, 27.20. The target should be 28.10, and stop loss should be around 26.80.
All right, Hitesh, thanks a lot for those trading strategies. So that's some commodity ideas that we have at this point in time. The market is a bit on the lower side today. The Nifty is at 76.82. Advanced decline ratio is now in favor of declines. We'll take a break on that note. Up next, Ashwini Gujral.